Hey, I'm Danielle Shaw with ABCT Traders and Analysts, and welcome to today's trading lesson. Price tells you what? Volume tells you whether to believe it. We're breaking down volume and relative volume from the ground up, what it actually is, how it works, the exact rules for getting in and getting out, a real worked example, the mistakes that trip most beginners up, and how we put it to work in our own trading. This is education only, so stick with me to the end. And if you want real-time trade alerts, our free Telegram link is in the description. Let's get into it. Volume is simply the number of shares traded in a period. On its own, the raw number means little. 1 million shares is huge for a microcap and tiny for Apple. That is why traders use relative volume, RVOL, today's volume divided by the average volume for the same time of day. RVOL of 2 times means the stock is trading at twice its normal pace, someone big is interested. Volume is the only truly non-price input on the chart, which is why it confirms or denies everything price does. The core idea: real moves are backed by volume, fake moves are not. When a stock breaks resistance on 5 times volume, buyers are aggressively lifting offers, the breakout is likely to hold. When it breaks on average volume, it is often a trap that reverses. 2 structural signatures to teach: accumulation, price grinds sideways/up while volume rises, big players quietly building a position. Distribution, price stalls at highs while volume stays heavy but price can't advance, big players selling into strength. A volume spike, a bar many times taller than its neighbors, marks an event, news, a capitulation bottom, or a blow-off top. RVOL look back, 20 periods is the standard. This app's calculate_volume_ratio uses a rolling 20-bar mean. RVOL over 1 equals above average, over 2 equals unusual, over 5 equals something is happening. Volume floor, ignore signals under a minimum daily volume. This app uses 50K to 100K share floors, so you are not trading illiquid names with fake spikes. Dollar volume, price times volume, is the honest liquidity filter. A $2 stock doing 100K shares is only $200,000 of real interest. Wait for a price event, a breakout, a bounce, a reversal candle. Confirm RVOL at least 2 times at that moment. No volume, no trade. For breakouts, the breakout bar itself must be a high-volume bar. Best case, rising price plus rising volume plus RVOL climbing through the day. Target, ride while volume supports the move, trim into the first volume climax bar, an exhaustion spike far above the rest. Stop/invalidation, if price makes a new high but volume is fading, bearish divergence, tighten up, the move is running out of fuel. A reversal on a huge volume bar after an extended run is a classic top, take profit rather than hope. A $4 low float stock averages 500K shares/day. By 10 a.m. it has already done 2.5 M shares, RVOL about 5 times, and pushes through yesterday's high on the heaviest bar of the day. That combination, new high plus extreme RVOL, is the entry. Later, price prints a new high but each successive bar is smaller in volume, the divergence warns you the buyers are spent, and you trail your stop up. Pros, universal, works on every timeframe and asset, and it is leading confirmation, volume often expands just before price commits. Cons/failures, volume data is unreliable pre-market and in the first minutes, ETFs and index futures muddy single stock reads, and a spike alone doesn't tell you direction, you still need price context. Trading a breakout with no volume behind it, the #1 trap. Comparing raw volume instead of relative volume. Ignoring dollar volume and getting stuck in illiquid names. Treating every spike as bullish, capitulation spikes are bottoms, not tops. Calculate_volume_ratio, in backend/indicators.py computes the 20-bar RVOL used across the app. The momentum scanner requires relative volume at least 2 times, and dollar volume gates, early runners demands at least 5 times. The paper trade EMA signal needs today's volume at least 1.5 times the 20-bar average. Volume is a hard filter in nearly every scanner here. Price tells you what, volume tells you whether to believe it. Use relative volume, RVOL, not the raw share count. Breakouts need volume, new highs on fading volume are a warning. And that's volume and relative volume start to finish. If this made the strategy click for you, do me a quick favor, smash that like button and subscribe, because we drop a brand new trading lesson every single Sunday. Drop a comment with the strategy you want next, and join our free Telegram channel for real-time alerts with exact entry and exit levels. The link is in the description. Remember, this is for education only, not financial advice. Every strategy has losing trades, so always manage your risk and trade safe. See you in the next lesson. And if this video helped you in any way, please hit the like button and subscribe to the channel. It really motivates us to keep making these for you. And join my free Telegram channel for daily alerts with exact entry and exit prices. The link is in the description.